Hey traders, welcome to Charts and Coffee. Happy Tuesday morning, everybody. All right, we're taking a look at what we've got going on the S&P, and I wanted to start here. We'll get to the economic calendar and everything else in a moment, but I wanted to start here because I wanted to drive home just a couple facts about, for those of you like myself who are just sort of waiting for the follow through. What's it going to take, and where are we stuck right now? And if we can tackle issues like this, and this is an issue, right? I mean, unless you like range bound markets, which, some folks do, and that would be a minority, but that's okay. If you're making good trades and it's doing what you want it to do in this area, it's still listen up because it's going to matter. These are automated support and resistance levels. I call them the Darvis 2.0 because they are not traditional Darvis boxes, but they certainly are inspired by the work of Nicholas Darvis. And I know that we all as traders stand atop the shoulders of giants. And what that means is I like giving credit where credit is due. And I love having things on my charts that have been around for 60 and 70 years. It just reminds me that the true nature of what it is to be a trader really hasn't changed. Technology and everything's changing, but the base of it is rooted in a lot of things that you can read about in books that are 100 years old, which is amazing. I mean, think about Dow theory. That's a centuries old philosophy that still drives modern markets. I think that's kind of neat. I don't know, maybe I'm geeking out a little bit, but I do love it. Now, what is it about these lines that makes them so important? Because you can see through here, those lines are automatically drawn based upon a price pattern. It's not a chart pattern. This is actually a price pattern. You might say, Rog, what's the difference? Well, chart patterns are a little bit more subjectively drawn. Trend lines and horizontal support and resistance, where when you step back, it's formed some sort of shape, right? Price patterns are different combinations of usually open, high, low, and close that when they form, they will be the touch point for other lines to be drawn. And that's what a Darvis is. It's really a minor high or a minor low. This is where we're stuck. This is the range that we're stuck in. Now, am I bullish? Gosh, yeah. Overall, the trend has been up when it does show up, and the rest of the time, the momentum's bullish. And the candles are green, and they have been green since early September. And as long as that consistency is there, I'm going to look for the long side. And that means I'm going to focus on this zone right down in here as support. So as long as we can hold this area, there's no reason to think that we're not going to remain stuck in this zone. And you can see we tested it on the right here on the second with a low of 57.24. We tested it again just yesterday, or actually today. This is the candle from the 8th with a low at 57.25 and a quarter. It gives you an idea where those bids, where that volume, where that attention is stacking up. So yeah, I'm going to continue to look for opportunities to the long side. Let's go and take a look at what's going on with the NASDAQ right now. Similar situation. Okay, Rog, you've explained what this Darvis is. It's Darvis 2.0. All right, there we go. This is my support right down in here. And the cool thing about having all the zones and all the levels on my chart drawn automatically, the cool thing is what this does is it keeps me from making errors of maybe I'm just having a bad day, sloppy errors. It makes me, it prevents me from engaging in errors of bias where I want to see something move to the upside. Therefore, I'm going to find the things that justify that position. And, I love this saying, and I don't know who said it, but I think it's really true. We hear about the 90-10 when it comes to trading and trading success. 90% of traders typically lose. And that's statistically verified, and it actually gets worse. That's a first-year assessment. It gets worse as you go along. Another 5% usually wash out the second year. Gosh, that sounds like the odds against you. The odds are against you if you're looking at the odds incorrectly, right? So if 10% of folks are winning, that's a significant number. Still, every 100 people, 10 of them have figured it out and continue to figure it out, because the statistics also show if you can make it past your third year, you've got it because you've gone through enough seasons, right? So what are those 10% doing? And this is a great saying. If you're doing what the 10% are doing, Don't expect the other 90 to agree, understand, or even see what you're doing makes sense to them. It won't. You're always going to find yourself in the minority. So remember, if you're finding yourself with the majority, look around and make sure you're not taking advantage of the momentum of the majority. That's fine, but make sure you're differentiating between using the wave to surf and being part of it. And I think a lot of traders find themselves stumbling into the 90% because, well, if everyone else is doing it, which might be true for a lot of other walks of life, but when it comes to trading, when everyone else is doing it, you really need to stop and consider who you're with, the 10% or the 90. And remember, the 90 are never going to get what you're doing. So when you find yourself in that minority, you're doing well. Now, if I'm looking at the NAS, I don't have the same type of zone. It's not as narrow. We're not testing it at the moment, but you can see that the support isn't at necessarily 20,000. It's actually more at about 19,008, right? And we know that for the NASDAQ to keep moving higher, ideally, we see semiconductors, technology, communications, and consumer discretionary start to participate. The most important of those four are the two: technology and semiconductors. The coffee has yet to kick in. No, I think the coffee's kicked in. I'm going to tell you all something. The weather's been soggy, the barometer is dropping, and it's been pretty miserable in Florida on a number of levels, whether it's the weather or these hurricanes. Those of you that are on the West Coast, we're thinking of you. I've been on the East Coast of Florida a very long time, and it's a special kind of weather. It feels weird. Anyways, we're thinking of you, and I hope you're moving inland or wherever it is you go when this Milton is heading towards us. By the way, I do want to mention this because I know a lot of folks who just took our account growth plan class are wondering, Rog, I'm having to flee. We have moved the Wednesday session out, so don't worry about it. Take care of you and yours. We're going to move that bonus session out just so everyone's going to be able to deal with this weather as best they need to. And if you took the class, you should have already gotten the email that we've moved that bonus session that was supposed to be tomorrow out to November, and then we'll start again next week, Wednesday. Hopefully this ends up being a big cup of nothing. Knock on wood, it comes ashore as a nothing. Yeah, I'm watching it like everyone else is. It's pretty historic. Yeah, it looks the weirdest thing is, and we had an eye come over where I live years ago, but right before the storm hits, the weather's gorgeous. It just sucks everything in. And then, anyway, so let's talk about the Dow. The Dow doesn't have quite the same Darvis, but what it does have is some really cool overlaps between not only the daily price movement range, but the mean reversion. So I do like the Dow, and I'm going to keep an eye on things like financials and healthcare. This could be problematic because these are your number one and number two weighted sectors in the Dow. Now, if you go further down the list of weighting, you're going to find things like technology. You're going to find things like energy, industrials, right? And here we go. And also, transports, right? That's usually where you're going to find the offset. If we can't get strength here, and these are some of the weakest sectors at the moment, then it's going to have to be compensated with these four sectors. So keep an eye on energy, technology, industrials, transports. Industrials have looked pretty darn good. And I'll tell you, another one we need to keep an eye on as of late with the strength in crude oil, keep an eye on energy, XLE. All right, we're definitely going to want to keep an eye on that. And let's jump on over to crude for a moment. I had mentioned I can't remember when we talked about this, but I had mentioned that until crude can find its way over the equator. Now, if you're wondering what I mean by that, it's these dots right here. And I endearingly call this the equator. It's the difference between the bullish and the bearish hemispheres. This always has existed. I think if you look at traders in the 70s and 80s, they used the 200 period simple, right? That was what used to be really popular. And then as you moved into the 90s and early 2000s, exponential moving averages started getting a little bit more attention. So EMAs versus SMAs. And now, what I've done is taken what I've used. I used to use an SMA once upon a time, 30 some odd years ago. I used simple moving averages. Then I started using exponential moving averages because I accepted that recency bias is built into the calculation of an exponential moving average, where the more recent price action is weighted heavier in the way that the moving average plots. And then now I realize it's not just about price, whether it's SMAs or EMAs. We've got to factor in participation. So this is the evolution over 30 years of what started off as simple moving averages, exponential moving averages. Those still work unbelievably well. I just took it up a notch and said, all right, I'm going to change the way the equator is based on a 200 period setting. 200. Now, until we get above 78 and stay above 78, do you see how much selling pressure is in that area? And that's going to be the challenge near term, because not yet, but we could see it. We don't have an uptrend yet. So it's almost like running at a wall. And if you have enough momentum, you can break through. But if you don't, you're just going to bounce off it. And that's what we're going to see, at least for a little bit. And that's what we're seeing today. But that doesn't mean the game is over. Keep an eye on these two. This could be a very early look at crude oil slipping into that bullish hemisphere, maybe not without a lot of attention, which could be really great for upward movement in things like Exxon, things like USO, crude oil itself. Definitely want to keep an eye on those. All right. I've been getting some questions about NVIDIA. Yeah, I've been getting some questions about NVIDIA. And by the way, if you haven't yet joined us for the account growth class, it's really just beginning. In fact, you've got a better opportunity than ever since we moved the sessions out. If you haven't checked out yet what we're doing, you can do so over at simplertrading.com /growth plan. And what this is a repeatable plan. It's not about how we turn a little bit of money into a lot of money really quickly. That never works. And no, in fact, what it does, if your ambition is to turn 2, 5, 10, 20,000 into 10x, it's what it's going to do is it's going to turn it into zero, right? But can you grow a small account? Absolutely. But it's a measured approach that starts with risk management, goes to watch list building, then goes to how do we push our edge when we can recognize objectively that we've got one. What happens is traders sometimes want to push an edge all the time, or worse, they don't know what their edge is. So we define all those things. We define these really important pieces. What's your edge? What's the best type of market to trade to grow an account? What's the best approach for risks to keep from blowing up? And you put all these pieces together, what you end up with is a growth plan. Doesn't matter if you have $2,000. Well, I shouldn't say that. Doesn't matter if you have $5,000 or $50,000. I think there is such a thing as too small an account where you're really going to be leaning on the market to trend. Look, if you started off with $2,000, $3,000, $4,000 in 2020, as one of my mentors said, don't confuse an uptrend with brains. Ouch. A lot of folks sometimes do that. We can have periods of time where the markets go straight up. If you started trading January of this year, you had 3 months, an entire quarter of pretty much straight up action. And that was an easy time to grow an account. But what happens when we're no longer in that environment? So that's another thing we talk about. What happens when we're not behaving in the way that's great for account growth? How do you even know the difference? So these are all little things that are simple to find once you know what you're looking for, right? So since we're pushing that session out, that's going to give everybody really an extra week now to be able to check out the class and then get your charts all situated. So next Wednesday, so that's going to be October 16, we're going to start off with basically part 2 of the class, which is 1 hour get-together, classroom get-togethers for the next 4 weeks, going into the first week of November. So really stoked about this. Okay, so if we're looking at NVIDIA, I've been getting a lot of questions about NVIDIA. Rog, what's up with NVIDIA and what would you do with it right now? So NVIDIA doesn't have a trend, but it's had 2-3 days of moving up, which is nice. Just remember that this is still very nice bullish momentum, but neutral trend. And you've got resistance sitting here in this level of resistance is sitting at about, as you can see, 131.20. So it's kind of a similar thing to crude oil. We're going to run into this. Do we have enough momentum to break through that level and continue? In which case, pretty likely we could see a trend. So a couple things are going to matter. What's the NASDAQ doing overall? So this is the alignment. Then what is not just SMH, but XLK and SMH? What are these two doing? And then lastly, what's going on with NVDA? All right, so that's what alignment will look like, or what we like to call index sector stock, a top-down look. If those things are all moving together, there's a really good chance that NVIDIA could bust up through this level at 131.20. Otherwise, there's a real risk that this is temporarily overbought. And this is why I always teach traders, if you can, buy a dip. If you can, buy into support. So that way, the distance between support to resistance is unrealized profit and choice. You can choose to take profit off at that level. You can choose to do a number of things to reduce risk at that level. And then if it keeps going, Yahtzee, right? But you've got a really good level to begin with. So I would still say I'm going to wait for a dip. I like the long position in NVIDIA. Green candles in the gray zone are definitely something I like. I like them better in a trend, but this is certainly something that's strong enough. So NVIDIA is not a bad look. I just don't want to be buying it at higher highs. Not that momentum entries are not perfectly fine, but know what's waiting overhead. And that's this area around 131. And then when we go into today, I'll take a look at the daily price movement ranges. And if we can sell off a bit, hey, I don't mind to take a look at NVIDIA. And in the same breath, I don't mind to take a look at Taiwan Semi. I don't mind to take a look at SMH. There are a number of symbols in the SMH that are worth a second look, not just the number one weighted NVIDIA or the number two weighted Taiwan Semi, but where are the trends in this group? And you can see the trends in this group are in Taiwan Semi, AVGO, more so than NVIDIA. I like AMD, right? But a rising tide does tend to lift all boats. NVIDIA is a ship within a lot of, smaller dinghies, like weighting wise, right? Like Qualcomm. But in terms of trends, keep an eye on Taiwan Semi, keep an eye on AVGO, keep an eye on AMD, right? And then after that, I'd keep an eye on things like NVIDIA and Intel, right? Those are 5 stocks in this group that are great. And if I can focus on the trends and then, kind of take my first lap through a symbol of that's a collection of stocks, like SMH is a symbol that's a collection of stocks. The S&P is a symbol that's a collection of stocks, and then parse through which ones have the best probability. That's account growth thinking, because account growth is really about continuation. Anytime you've grown an account, anytime I've grown an account, it's been under the conditions usually of not just a trend, but an uptrend, right? So think about that when you're prioritizing what you're going to trade. Those would be the best in light of the filters that I use, right? What has bullish momentum and the most green candles. So then if I was going through it a third time, I'd keep an eye on AMAT. It's pretty good. I'd keep an eye on LRCX. It's pretty good. But that's dropping down to, say, the third tier. First tier trends, right? That's going to be your Taiwan Semi, AVGO, AMD. Second tier, I'd keep an eye on Intel. That actually looks better than NVIDIA. And then as you get down to NVIDIA, AMAT, LRCX, I'm certainly not bearish. But this is the prioritization that we like to focus on, so that it's not about today or a couple of days of moving higher. It's what has the possibility of moving higher for 2 days, 10 days, all the way to maybe the third Friday of this month expiration. So those are things that, ultimately we want to keep an eye on. Texas Instrument is a no, Ricardo. It's not that it's a bad setup. If you're looking for support, it's going to be around just below 200. I'd keep an eye on the area around 199.80, Ricardo. And Tony asks, is TOS mandatory for my teaching or indicators? No, Tony, I support 2 platforms. One is, of course, Thinkorswim. It's the most popular here at Simpler amongst the entire community. And the second one, though, is broker agnostic. And I'm a huge fan of that, and that is the TradingView platform. So the two platforms that I support with my indicators and in my room are Thinkorswim and TradingView. You can trade with whomever you want in terms of TradingView just being a charting platform, and a really great one at that. So TradingView and Thinkorswim. All right, gang. As always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station.